see on here 5 different loan types are the 5 basic loan types that are available in the US, whether you're a first-time buyer or a second-time buyer. There is no other loan that's available that's not actually on this sheet. So I'm going to go over each one of these loan programs. You don't have to really understand these fully, because if you work with me and my team, what we're going to do, we know these very, very well. We know these like the back of our hand. And so we're going to recommend, once we know your specific situation, we're going to recommend one of these loan programs or maybe a couple of these loan programs for you. But at least you can get a general idea of what the loan programs are and what's available to you. So this first one here is Jumbo. This is if you bought for more than $726,000. If you're a first-time homebuyer, there's a good chance that you probably won't need to get a jumbo loan. The minimum down payment on this one is 10 to 20% down, and the mortgage insurance varies. Now, I did a very extensive video on mortgage insurance and what that is. I'm not going to explain what mortgage insurance is in this video. You can go in the training and click on mortgage insurance, and I explain that in more detail. So with the jumbo loan, I'm going to go ahead and cross this one out. More than likely, you won't be needing a jumbo loan. So the next one is a VA loan. So the VA loan is for any veteran. If you're a veteran, then you would be able to qualify for a VA loan. Now, the VA loan is an amazing loan. The reason why is because the down payment, there is no down payment requirement for a veteran. And so as a first-time buyer or even a second-time buyer, a veteran can purchase with zero money down. The other cool thing about the VA loan is there is no monthly mortgage insurance. And this 3.15%, the VA will charge what's called a VA funding fee. That VA funding fee can be up to 3%. Now, if you have a 10% or more service-connected disability, this VA funding fee is actually waived and you actually don't have to pay this. If you don't have a VA service-connected disability, that fee can range anywhere from 2 to 3%, and it gets added to your loan amount. So that's the VA loan. The next one is USDA. Now, the USDA loan is another great option. You'll notice there is no down payment. It's 100% financing. The one thing with the VA loan is you have to buy outside the city limits of Redding. And so if you're watching this video in California or in Shasta County, you can't use this loan inside the city limits of Redding. So you have to be in a rural area. And this is true for the whole United States if you're wanting to get a USDA loan. So below this video, I'm going to put the property eligibility website where you can actually put in an address and see if it's USDA eligible. The other thing with USDA is you can't make over a certain amount of money for a family size of 1 to 4. And the income limits vary based on where you live. So like, for example, in Shasta County, right now in 2023, if you're a family size of 1 to 4, you can't make more than $91,000 for the year. If you have a family size of 5 or more, you can make up to $120,000. Now, I'm going to put the link for the income limit. You can just put in your income and where you live. It'll tell you if you're eligible for the USDA loan. It's a great option. The other cool thing with USDA is the mortgage insurance is only 0.35%, and this upfront funding fee that they call it, they actually just lowered this, so it's actually 1% upfront that you pay for the USDA loan and 0.35% per year for the mortgage insurance. So another great option. The next one is a FHA loan. Now this FHA loan, you probably have heard of it before. See, the minimum down payment is 3.5%. And then you have the mortgage insurance. Now, they just lowered the FHA mortgage insurance down to 0.55% a year. And so this mortgage insurance is a lot cheaper now, which makes FHA more favorable. And so this is another great option. Now, the minimum down payment is 3.5%. This is where down payment assistance programs come in. So with FHA, the minimum down is 3.5%. Now you can get a down payment assistance loan if you're a first-time home buyer that covers this 3.5% down payment. Now here's where it gets interesting. These down payment assistance, there's hundreds of them. We know these programs very, very well. And I'm going to put a link below this video or somewhere on this page of all the down payment assistance programs that are available in Shasta County. There's many more across the United States depending on where you live. And I'll put a link, another link if you're in the United States. There's a tool that I have that you can actually look up any down payment assistance in the country. But if you want to buy in the Shasta County area, I do have all of these programs listed out in a nice PDF document. You can read about them. Now, that's the FHA loan. The next loan for a first-time homebuyer is conventional, and the conventional minimum down payment is 3%, And you'll notice that the mortgage insurance, it says varies. And the reason why it varies is because it varies based on credit score and how much you put down. So if you get the FHA loan or the USDA loan, that mortgage insurance is the same no matter what your credit score is. So this is why we will be able to give you a good recommendation. Say, hey, I think you should do the FHA loan because your payment is going to be lower than conventional. Or it could be, hey, we're going to recommend conventional loan over the FHA loan. Now, that's why you want to use us, and we will help you and give our best recommendation for which loan type you'll be able to get. These are the 5 basic loan types. Now, where the down payment assistance programs come in, and I'm going to do a completely separate video for those programs, is you can actually get help for this down payment here. And if you're doing the USDA loan, that you can still get down payment assistance. The down payment assistance you can get it for the down to put money down, or you can actually get it to cover closing costs on the loan as well. Now, one thing I do want to point out is out of all 5 of these loans, we probably do the FHA loan the most. And the reason why is the FHA loan is the easiest to qualify for. You see, FHA will let you borrow for a lot more than what USDA will based on your income. Also, with the FHA loan, the payment is a lot of times going to be a lot less than what you would get on a conventional loan because of the cost for this mortgage insurance.